Okay, so can everyone see my screen?
I can see it.
Okay, perfect. So good evening, ladies. I can't, if you're joining, I can't see you, but like whenever you join, I just want to say hello. And before I start, right, I just want to say something real quickly. I truly am honored to be in this space, and I'm equally just as excited. And it's not because I have all the answers, because I don't, but it's because I've been exactly where a lot of you are sitting right now, if you're sitting at home or if you're driving in your car. And I will say this, I was a little overzealous with all the information that I wanted to share with you. So it's going to go a little longer than 30 minutes, but I'm going to go by quickly. If stuff goes over your head, Rick, it's okay. The recording will be available, and please reach out to me. My goal is to start this and then build a relationship, because this is not the thing that's going to get you to start investing, right? What I'm going to do is share my story. And then I'm going to talk to you about what passive investing in real estate really means. I'll tell you just a little bit about tax benefits and depreciation, and then even being able to do this with your retirement account. And at the end of the day, I'll tell you about Pheenyx Capital, which is a company that I built and that I'm really excited about. And like we're really seeing really cool transformation in financial literacy, especially in the physician community. So that is my goal. So let's get started. Uh, and there's a saying that I carried into work, and I will never forget, and I want to share that with you. And it's this, it's tell me, and if you tell me, I'm going to forget. If you show me, I'll remember. And if you involve me, I will understand. And I'm not here, I don't want to talk at you, right? I want to pull you into the conversation, because decisions are that we're going to talk about, they're not abstract, right? They're personal. So you hear a little bit about how I got into this, but also it's about you, right? How do you see yourself in this? So it's about your life, your family, your freedom, and the years that you have ahead of you. And really, how do we do this? So that's really what's going to excite me. I want to start with this before we get into a single number. So before I tell you about what I've built, what you can build, right? Before I talk about a single property or even a tax strategy. So if you're driving, don't do this. But if you're sitting, just close your eyes for a second and think about the last time that you felt truly free. A lot of us are trying to build something. And so that time might be not any recent time. And not like free between shifts, or you're driving home and you're like, okay, I'm done, or free between surgery, or not even free at a lunch break, right? But just like truly not disturbed free. And then ask yourself, right, what changes if your income no longer depends on your physical presence every single day, right? And I want you to just think about that for a second. I want you to really sit with that, because everything I share today is in service of that answer, right? What happens, right, if your income no longer depends on that physical presence every single day? What could that look like? What could you dream of? What would you want to do, right? And if you have a pen and paper, just jot it down. And if you're listening to the recording after, maybe you'll have some time to do it. But this is as much as you put into it. And these are the questions that I want you to answer. And I want to acknowledge kind of like who's in this room before we move forward, right? In 2026, women, we make up 39% of all actively licensed physicians in the country. And I know that we're talking about Texas, but like in that alone, right, they're just over, I think over 30,000 actively practicing right now. And even in Houston, right, that I believe, and I could be wrong, but I think this is correct, like it's home to like the largest medical complex, right, in the country. But the sad part is that it still has female physicians earning 29% less than our male counterparts in the same specialties. And I want you to sit with that for a second, right? Because we're building the future of medicine with our hands, with our brains, with our expertise, with our sacrifice, right? But our financial structures around us have not caught up with what we deserve. And that's why this became so important to me. And it's not a complaint. I'm not complaining, right? But it's a starting point, right? And this might be the first time that you're like, wait, what am I contributing to? Where do I stand? But if the systems around us are not building us up, then we have to do it for ourselves. And that's I want to say the excitement, or maybe the fury in me, that even helped me build what I was building. And so I just want to say this, right? Like this is purely educational. I'm going to tell you about passive income. I'm going to tell you a little bit about myself. And I really just want to give you frameworks. And sometimes vocabulary, because before I started investing, I didn't even know what multifamily was. I didn't even know what apartment investing was. So my ask tonight is that you take what I've told you and then you go ask your like the people that you trust, your advisors, your CPA, the people that help, even your spouses, right? The people that help you make these financial decisions. Go talk to them. But what I want to tell you is that I won't dress this up. It's not going to be hidden behind jargon. I just want to have a conversation with you. And please, if there's something I said that didn't make sense, please ask me questions, or just even period, ask me questions at the end. I want to I'd love to share that. So I grew up real quickly, and then we'll get into the meat and potatoes. I grew up with a version of this promise, and I think a lot of you have heard this. It sounds something like this, right? Study hard, work hard, become excellent, choose something that's going to do well for you, right? And then security will follow. So that's medicine, engineering, law, right? Like if you're like, I'm from Nigeria, and if you're anything like me, right? Our parents were like, these are the only things that you can do, right? And I believed that with everything in me. And that belief carried me through medical school, through residency, and through like hard nights in the ER when I was working on no sleep and just sheer stubbornness, right? But here's what that promise never said. It never said anything about like what happens to our money once we earn it, right? It doesn't tell us what to do about taxes. It never mentioned like depreciation or equity, none of that, right? It didn't tell us any of that. And I want to be clear, I'm not bitter about it. You're not bitter about it. But I was determined to close that gap for myself and for every woman that I came in contact with, right? That was my heart. That was my goal. And that's what I wanted to share with you today. And so for years, right, I was in the emergency room and it was my entire world. I loved it. I want to be clear that I loved the work. And I love being that person who could walk into crisis and find the solution, right? I love being the person who, like, I would go to work on a Sunday morning and I would hear a woman screaming, and in the ER, I'd deliver a baby, right? Like, that was fun to me. But the truth about life, and it's the things that we don't say, we don't tell ourselves, or we hide it, right? You can deeply be respected and love what you're doing, but you can also be exhausted. And those two things, right, they can live at the same time in the same person. And the day that I realized something, right, that it changed everything for me, right? If I could not physically show up to work, right, my income would stop, right? If I didn't show up, if I missed a shift, if I didn't work as hard as I was supposed to, right, that income was going to stop. And every single dollar I had built my life around, it was being present, it was working. And what I want to start telling you about is that's not wealth, right? That's just a well-paying trap. And a lot of us are in that. And so there was a season, right? And I know some of you have lived through that season, and where we all assumed that like healthcare means security, and that demand for something that we do so urgently, so irreplaceable, like that economic force, we can't shake it. So this is what happened to me, right? COVID happened. And at the same time that COVID happened, right, a private equity firm, they bought over my practice. They bought over the emergency room, and the security that we had spent a decade building became someone else's decision. So around that time, they started firing physicians. They started cutting our hours. They said that our contract said they could cut our hours within reason. And at some point, we were working 60 hours a month, right? Which is like nothing. And so they changed our schedules, our income struggled. People needed one, two, three jobs. And overnight, right? The certainty that like we held on so tightly to, that certainty that we had built our financial lives around, it was falling apart. And that just changed everything. And when I think the hardest hit was when they fired doctors in my practice. And I'll tell you this, right? After they fired doctors, they moved us to an RVU structure and we started making too much money. And then they changed us back to hourly. I kid you not. And those were the changes that were happening daily at work. And this is the truth that nobody teaches you, right? A high income that stops the moment you stop is not financial freedom. And that is the part of my story that I wanted to share with you, because that is how I started looking for another path. That was when the idea of what else? I can't rely on that single source for my entire well-being, right? My entire financial journey. And so I started thinking, what else? And I will say this, right? So it was about maybe 7 years ago, and I stumbled into real estate investing. And I just knew, right? We had been told that one of the paths to really building wealth is real estate, because every human needs a place to live, right? Housing is a basic human need. And so what did that look like? And us as physicians, right, we have this ceiling, right? The ceiling, we can make as much money as we can based on the hours that we work. But what does it look like if we fly over that ceiling, right? And that's where the idea of ownership starts coming. And that is kind of where a lot of my story started. So I started looking for something to invest in. And again, I told you I stumbled on multifamily real estate investing. And after doing research, doing a lot of research, I vetted multiple companies. I joined Facebook groups, I joined LinkedIn groups. I was looking online for the right place to start investing. And I remember the night that I wired the money. And for me, 50,000, right? Today, 50,000 looks different. But for that day, I was thinking about all the extra shifts that I had worked. I was thinking about all the overnights, all the weekends, all the holidays that I had given up, and I did it, right? But when I hit send, I will tell you this, ladies, that 50,000 became the foundation for who I am today, what we built in Pheenyx. And now we have 153 million in assets under management. That's our portfolio, right? It's not just mine, it's us with our investors. But the first thing that it taught me was that the fear before the leap is always louder than that fear deserves to be. And I was afraid. I didn't know. Nobody taught us, right? In medicine, we're experts in the medical field, but anything outside of that, right, we don't know. And we trust people, we trust experts. But I thought, in the beginning, I did trust experts, but at some point I was like, we should learn this for ourselves and start sharing it amongst ourselves. And so that is how Pheenyx was born. And it was a foundation for what we built today, but I had to take the first step. And here's what I need you to hear, right? As we start talking about real estate investing, that number is not the whole story. That number is our collective, is what we've done collectively. The point is what shifted inside of me that day or that night, or what I started building. I used to practice medicine because I had to, because like my family's financial security depended on it, because my future and legacy, right? All of that depended on it. But now I do medicine because I want to. And I want all of us to have that option. And when you feel that way, or when you approach life that way, right, it's so different. And that's why I titled this The Second Engine, because that's what it became for me, right? I now understood the concept of ownership, and my path was through real estate investing. And so that is what I want us to build tonight. So I want to take a pulse. I know I can't see people with this new Zoom configuration, but I want to take a pulse of, like, for a moment, just in the room, right? If you're just joining, welcome. And you don't have to raise your hand or say it out loud. But I want you to be honest with yourself about whether any of these questions that you're seeing on the screen that has ever lived in you. Whether this has landed on your chest at 2 a.m. Let's say you're driving home from work, or like you finished a late call, or you're on call and somebody woke you up in the middle of the night to answer a question, or whether you're thinking about a dinner table that you miss, right? If you look at these questions on the screen, have you ever felt any of that? Because the conversation is not about me convincing you to do anything. It's not that. But it's recognizing that these questions, like, we have to start asking ourselves these questions, and we have to start keeping ourselves accountable. And tonight, right, that's the framework that I want us to build. So passive income, what does that mean? And my goal now is to slow down a little bit, but strip down kind of all the pieces of the complexity. So you don't need to be a real estate broker. You don't need to be a property management manager, right? What you need to do is just clean, unshakable understanding of really what passive income really means, and why I picked commercial real estate investing as the path for me as a busy physician. But it's the path I chose, and it's not the path for everyone, but it's what worked for me. And that's what I love talking about, and that's what I love sharing. Now, let's clear away the noise of what passive income isn't. It's not money that's falling from the sky. It's not that passive. It's not a side hustle, because the side hustles work. And it's really not a get-rich-quick scheme. It's this, simply. It's cash flow that's generated from an asset that someone else manages day to day. So you're not doing the work, but because you invested in it, because you put your capital, right, you're benefiting from the cash flow. And active income, all it is just takes your time, and your time makes money. Passive income, again, is just like your capital participating in a system that's run by a professional team. That's the big difference. And I will say this, like every woman in this room or who's listening, we already have an actively intense job. And so the goal and the idea is that we're fortunate, we've built residual income. The goal is now like, how do you deploy that capital so it works as hard as you do, even on the days that you can't, right? That's the big, that's the like genius message, right? And that's how the wealthy of the wealthiest build, right? And that's how they generate wealth. It's through ownership. And sometimes ownership is just leveraging what you have and using it to build something else. Okay, so what is multifamily? Like, what's multifamily investing and what's multifamily apartments? It's just simply a building that contains multiple individual homes. That's it. So think, apartment communities, and it's not necessarily luxury, right? The apartments that we buy are apartments that you and I, or maybe I lived in when I was in college or when I didn't have a ton of money. Like, so it's good quality places. Some of it is workforce houses, some of it is family housing, but it's truly just the kind of housing that humans will always need. And that's what we go after. So instead of buying one house and crossing your finger that one tenant will pay on time, now you think about owning like a piece of a community that has many doors. And that's how we think about it. So your risk is distributed. And here's the part, right? For a lot of us busy professionals, you could buy that single unit and you could manage it, but some of us are busy enough and we don't want someone to call us and say their toilet is clogged at 2 a.m. in the morning. You don't want to chase a late rent check, right? You want a professional team that does it for you. And your job is, okay, I just want to participate in the ownership, economics, and the distribution. And that's what that looks like. And so a lot of investors, right? And I'll say this, right? You hear this the first time and it might not make a lot of sense, but you hear it again. And when you keep stacking on the knowledge, it's going to start making sense. And so when you think about real estate investing, right? Again, single family is part of that strategy. But for a physician who has limited time, maybe you're building a business, you have a full clinical schedule, right? They often turn like when you have a single family, it just turns into a second job. So like your weekends, your evening, or you force your spouse to do the work for you. But when you think about apartment investing and multifamily, right? Think about institutional scale. So it's one asset at a time is what we buy, and our investors usually invest in multiple assets. But for thinking purposes, one asset, it's professionally managed. It's usually by a third-party property manager, and the risk is distributed. And your role is simply, let me bring the capital, let me trust the people who do the work. I'm going to vet them, but trust them, let them do the work, and let my capital work for me. So that's kind of how you start thinking about apartment investing and why you might want to do that. And so how do we do it? It's called a syndication, right? And the syndication model is this big term, but it's very simple, is you find an operator who finds the deal, and then we investors pull the money together, we buy it, and we manage it, right? And that's kind of exactly what it is. But sometimes when we hear this fancy jargon, it's very confusing and we shut our brains down. But I want to go through it real quickly, and I broke it down on the screen. But it's, a professional operator finds the deal, right? They do the deep work, and this work, you have to make sure that they do the deep work. So they analyze the market, right? What market, where are jobs moving? Where are people moving? Because when people move, they need a place to live. And so they're going to fill up these apartments, right? What does due diligence look like? What was the physical inspection, the financial modeling? Are they aggressive? Are they too aggressive? Are they too conservative, right? So when you find that team that does that, right, then they'll bring it to investors. Your job is to review the data. Your job is to ask questions, right? If you don't understand, let me tell you, ladies, whenever you're ready to start thinking about investing, no question is off the table, right? Like if you are like, hey, I want to know, I want to see your track record. I want to speak to your other investors. I want to do a background check on the team. Like, who am I investing? This is your hard-earned money. And so you want to partner with a team that you can see, like, have they failed in any deals? These are questions that you should be asking them, right? And so if it aligns with your goals, then you participate. And then the operator, then after we have bought it, right, all of the investors come together, then the operator manages everything. So they'll manage the renovations, the team, the leasing strategy, like all of that. And the goal is that you want the property to be cash flowing so that you can receive that cash flow and passive income, and the distributions are going to flow to you. And so you get cash flow, and I'll break this down because you should be thinking like, how am I going to make money? And so you make it through cash flow, which is distributions. And then when the property sells or refinances, you're going to share in the upside. So you have both cash flow and appreciation. And that's what's important. That's how you start making money. And then we'll add in taxes and depreciation and a bunch of other stuff that makes it even more just beautiful. But that is truly what syndication looks like. So I said, how do you make your money? Again, the rent comes in, right? It doesn't just land in your account. Tenants will pay rent, and then it goes through a system. The operating expenses get paid, admin, payroll, all that stuff, taxes, insurance, all of that gets paid. And then right after that, we pay mortgage. So we have large financiers who will give us like 70% of the money to go buy the property. We'll pay our debt. After debt is paid, then we have reserves. We put some money in reserves for a rainy day. After that gets pulled out, anything left is cash flow, and that gets distributed to everybody who invested in the deal. So that's really how it works. We never skip reserves. It just protects you because you never know what's going to happen to these apartments, because these are normal people living in there, and somebody might forget their noodles that they're cooking and burn down a building, and we have to take care of that. So we have to make sure we have reserves in place, but we also have insurance to cover all of that. But that's part of protection, but that is the discipline funnel that we use. And so when the distribution hits your account, know that it's cash flow. Know that, and these are questions that you should ask. Is the property cash flowing from day one? That's important for you to ask. And so this is where real estate investing becomes kind of different from other asset classes. I told you about cash flow, and then I talked to you kind of about appreciation. But you should also understand that while you're receiving these cash distributions, right, the property is appreciating in value, and then the tenants simultaneously are paying down the debt, right? Because they're putting in equity. And so they're paying down the debt and they're building equity without you lifting a finger. But then the cool part is that the tax code allows for depreciation. And so as the property is appreciating in value, the actual property itself, like think the roof, the structure, it's depreciating. And so then you can get paper losses that will shield portions of your taxes, right? And so when you think about those four, they happen at the same time in just one asset. That's why busy professionals are leveraging real estate, leveraging apartment investing, because of all these multiple layers: cash flow, appreciation, depreciation, and then, building equity. So that's one of the benefits that they really love. So I want to give you a simple example, and this is truly just this is a projection, and this is something similar to what we do. I told you my first investment was 50,000. If you place 50,000 in a well-structured deal, right, it's yielding about 7% in just cash flow. We're not going to talk about appreciation at the end. That looks like about $875 in your account every quarter. Now, please hear me say this. $875 is not the point, right? The point is that the money arrived while you were doing nothing. Maybe you were at your child's recital. Maybe you were going on a morning run. Maybe it's the summer. And in the last 2 days, I've talked to 4 people that are traveling abroad. So maybe you're traveling abroad, or maybe you're just doing nothing, right? But the money's coming in. The thing is that you are not trading any time for this money. And I know that 875 is not what's going to change your life, but for the first time, right, you see something that comes into your account that you did nothing to earn that second, right? Something in your brain shifts and you stop thinking like an employee and you start thinking like an owner. You're like, okay, if this happens, what else can I do, right? You start asking questions. You start putting yourself in circles where people are thinking bigger than, I just go to work. I just do this one thing, right? And so that is kind of what I want you to think about. So when that first notification hits your phone, something starts to shift, right? For your entire career, like your bank account moved in one direction, and that was you sacrificing your time, your energy, your mind, and that's all you knew. But seeing the capital produce value, seeing your capital, your hard-earned money, right, now produce value, again, it does this psychological equation, and it changes something. So you stop thinking in terms of hours and you start thinking more of assets, and that's completely different. So again, right, I just told you a little bit about cash flow, but appreciation on the back end is where you get significantly more. Plus, you also get return of that, your capital. So at the end, when we sell, you're also getting return of your capital. But my goal is to just plant the seed and to tell you, like, this is what's possible. Okay, so I'm going to quickly talk about taxes. I'm looking at the time as well. And I'm not your CPA. You should have a really good one. And what I'm about to tell you is educational. But as high earners, we have to understand that true wealth is really not only about what we generate, right? At the end of the day, it's what we keep. But even more than that, it's how we protect what we're earning. I think that's so important. And so in learning, even in real estate investing, it's so important to understand taxes, like tax strategy, how you can use that as leverage as well. A lot of us ask the wrong question and we always asking, how do I make more, right? You're like, I want to make more, I want to make more. But ownership asks a different question. And it's asked, how much of what I earn can I protect? How much of that can I convert into assets? How much of that can I pass on to the next generation? And commercial real estate gives us access to like really cool institutional tax tools. And the biggest one of them is depreciation. You also have cost segregation. We have bonus depreciation where you can claim everything year one. And these are not loopholes, right? These are like true legal established frameworks that the tax code specifically makes available, to real estate owners, to investors just like us. And so the goal tonight is not to turn you into a tax accountant, but it's to give you vocabulary to have a better conversation. And I was talking to Rita right before we started, and even there's an opportunity where if you are an investor in one property and you sell that, you can quickly just move the money into a like property and you avoid paying capital gains taxes. So they're just really cool ways that nobody's telling us. And again, right, we have to be having these conversations to know. So stay with me for 60 seconds because this is the slide that I want you to change how you think about taxes. When you invest in a property, right, the IRS is saying that the building is going to lose value on paper every single year. That is called depreciation. And it's not that the building is falling apart, right? In most cases, right, with real estate, it's going up in value, but the tax code lets you write down those losses, right? And so this is where every person in the room, you should care, right? We are all high income earners. We are all in top tax brackets. So every dollar of our taxable income can like legally, like it can every dollar that we can reduce, right? It's more money that comes back in our pocket. And so and as an investor, right, you are able to claim depreciation. So you are able to claim these paper losses on your returns. Now, you can only claim the depreciation on your passive losses. So any income that comes in from a passive standpoint. So all the distributions you get, if you have rental properties that you're getting income back, like all of those are passive income. And so this will help you depreciate that. And so so that's the thing, right? That's like the key about this. Now, if your CPA hasn't talked to you about depreciation and you invest in real estate, that is a conversation you should be having this month, right? Or tomorrow, schedule a call. But it's conversations like that we need to be having. And so I put this just one slide in. This is, I don't want to say it's a random slide, but I think it's important, right? And I don't know if a lot of people know this, but you can also invest in real estate through your retirement account. And it's not, a lot of people don't know this. I didn't know it when I started this. And I had been building, like I have this large retirement account. I'm always like, what am I doing with it? And it just slides into stocks, right? But the firms never mention it. They want your money in their products, right? But it's something that we have to start thinking about. And it's a product called self-directed IRA. It's the same IRA, same tax advantages, but it's not limited to what your brokerage offers. You can invest in alternative assets, and real estate is one of them. So think about like what that means. Like your retirement dollars can invest in an apartment complex. So maybe you're building a practice and maybe you don't have a ton of cash, right? But you are like, well, I left this practice and I have, a few $100,000, right? I could invest in real estate. Or even you're like, okay, I don't want to put all of it. Maybe I split it in three and maybe I invest in three different parts of the country, right? But at least now you know what's available and you know the options you have. These are conversations that you should have with your CPA. They're custodians. We have a custodian that we work with, but you can also find your own custodian, right? But these are questions that you should ask so that you know what's available. Okay, I'm gonna stop for a moment and not talk about financial projections or taxes, right? Um, I want to just write down this sentence, right? If I had right now, right? If I had reliable passive income flowing in, I would finally have space to whatever that is for you, right? Fill in the blank honestly, think about it, right? If you had income coming in, like if you structured your finances well and you have passive income coming in, right? What would you have space for? And again, right, I'm asking these questions because I wish someone told me about this years ago, right? I wish I knew about this, but the best time was 10 years ago. The next best time is today. But when you plant the seed and you start asking yourself these questions, then you truly know what's possible, right? And so, and now I want to kind of look you in the eye and tell you, I've told you all the great things about it, right? Is it safe? Nothing is perfectly safe, right? We've worked too hard for me to sit here and tell you that this is the best thing since sliced bread. Real estate has its risk, right? There are market cycles. So there are some, ebbs and flows. Vacancies will happen, right? If we have another pandemic, people might not be able to afford rent. Interest rates will move. If you know what happened a few years ago where interest rates spiked, they're slowly coming back down. They've peaked a little bit more. But these assets, this real estate investing, these assets are illiquid. And so that means that like your money, the life of the deal is usually 5 years. Your money is tied for that long, right? So these are some of the things that you have to think about. But we know that like when you think about like our medical training, our clinical training, right? Risk management is not about avoidance, right? It's about like doing rigorous pre-intervention assessment. So it's like asking the right questions. It's about knowing what every possible failure and knowing and understanding it and then moving before you commit, right? So I think that's what's important. But I want to sit here and tell you, right? Yes, you have to be careful about market cycles and but again, right? Your goal is to ask the questions. Your goal is to know the questions to ask so that you are more informed when you start making those decisions. Okay, so I talked to you a little bit about my story. I talked to you about what passive income really means. I tried to explain multifamily real estate investing and how it works in pulling money and what you get in return. Now, I want to talk to you a little bit about what I have built. And I'm going to talk to you about Pheenyx Capital. It's no pressure, no hype, but it's clarity around what we do and how we do it. And I'm grateful to say that I have built this with over 175 investors. Most of them are physicians who are partnering alongside with me, building, buying real estate in the Southeast and really building wealth. And so I founded Pheenyx Capital because I realized that us busy healthcare professionals, particularly women physicians just like me, we didn't need another flashy investment deck because so many people are coming at us, but we needed a disciplined partner who could speak our language, respect our intelligence, but understand what's going on. And so my goal is to bridge the gap between what you've earned and true real estate assets, right? Institutional grade assets. So we compete for these assets with like the likes of BlackRock and the big institutions. We don't win all of them. We closed, our last deal we closed was in February. We wanted to do 4 last year. We only did 2 because we just lost. And we reviewed over 1,800. We underwrote about 900. We submitted offers on about 75 and we only won 2. So that's just kind of the rigor behind it, but it's worth it because the deals we get are true quality assets. And so every deal that we get, we run it through like rigorous underwriting. So that means like we make assumptions. We think about like what will happen if the market are the rents going to grow? What will happen with vacancy, right? All of this stuff, we're just thinking about it because again, right, at the end of the day, my capital is involved, so as well as yours. And we work so hard for it. So that's my promise to you. And I feel great saying that out loud because we've built something really cool and we keep going. And so before we deploy any single dollar, right? My mission is complete understanding. So we walk through when you are thinking about it, right? We walk through kind of understanding, you understand the model. So this is what we're doing. This is what we're thinking. We'll show you the assumptions. We'll stress test scenarios. We'll give you market data behind like why we're heavy in Georgia, why we're thinking about the Carolinas and the Southeast, like all of that. There's market data behind it, like looking at like the EV plans. Rivian is moving, Meta is moving down south, like all of those things take into account the reasons why we are buying in certain locations. I will say this, right? Passive investing, as I remember I told you, it's not money falling from the sky. You should never be, it shouldn't feel like you're flying blind, right? You should be able to explain this investment to your spouse, your advisor, or you should even be able to tell yourself, like explain to like, oh, wait, I get this, I get this. And you might not get it the first time you're hearing me talk about this, right? It might take a deal or two to get the hang of it, but I want us to be learning. I want us to be empowered, right? We're great with medicine. You don't have to be an expert in this, right? You're going to find an expert, but I do want you to understand where your money is going to. And so this is a thing about passive investing that nobody tells you up front, right? There's a lot of work that goes into it. So I just wanted to lay out beginning to end what that looks like. Someone is sourcing the deals. Someone is stress testing the financial models. Someone is managing like the construction timeline, like what renovations are we going to do after we buy it? Someone is overseeing all the staff. Each property has anywhere from like 3 to 5 staff on ground. So think like maintenance, front desk staff. You can think about like the people, the touring. So there's a bunch of like staff that's involved in every property. And then someone else is auditing the monthly financial. So all of that is kind of like the beginning to end on the back end, what happens as you start managing these assets. So this slide makes me really happy, and I don't want to dress it up with a ton of marketing language, but these are the properties. These are some of the properties that we've invested in. So the Park at Arlington, the Rise, Grove, McKinley, these are true, real properties, real addresses, real residents that are there, and real operating results. But this is what's possible when you put your mind to something, right? You work hard and you see the value of it, and then you bring it to others who have a shared vision and a shared mission and want to build, right? We work so hard. I keep saying it, we work hard. And so what does it look like when we think about true wealth creation? And so that's 153 million in combined realized portfolio and over 885 total apartments acquired. And that's 6 institutional properties that we have acquired in the last almost 4 years. This is not a concept, right? This is a track record. And I'm grateful to say that it happens when you get true, genuine confidence, right, in what we do before we deploy any capital, and investors see it. So we haven't lost an investor capital, and we continue to build. And again, right, I said it before, I don't own it alone, right? I have over 175 investors across the country who have started understanding the power of ownership and the power of building wealth, and they want to do this together. And so the feedback I love most from our investors is not about returns, right? It's just like, it's the clarity that they get, right? It's about feeling respected in the conversation and understanding that you finally have a space where you can ask hard financial questions and you can get honest, like direct answers without feeling small. Like, I don't know what depreciation means. Okay, let's talk about it, right? Like, okay, what does distributions mean? Like, where does it come in? Like, all of those things are conversations that we have. And we as women physicians, right, we are most of the times we're the authority in every clinical room that we walk into. I have learned and I've come to stand on the fact that we deserve that same authority when we're having financial conversations. And for me, right, I understood that power through real estate investing. But I will tell you that what changes first when you step into work is not your bank account. It's the way that you carry yourself. And you can also do that when you start building that financial confidence and you start investing and you start seeing the returns. And that, I think, is what like that idea of posture transformation looks like. And that is probably what, more than anything, that I want to instill in us tonight. And so to help continue this journey, and I want you to do it at your own pace, I built a resource. And this is probably one of my favorite resources. And it's called the Ultimate Passive Investor Playbook. And if you scan the QR code, and I'll make sure that I put the link, but it's not, I did it. I was doing a presentation one day. I'll tell you how it came about. I was doing a presentation one day and I was just kind of doing the red flags on investing. And by the time I put it all together, I was like, man, this is such a great resource that I should have, right? And really what it does is it vets the location, it vets the operator, if that's the type of property you should be investing in. And it kind of just walks you through also the market, right? Where you should be investing in. And they ask questions and it helps you think through that. So it's very easy language. It's not complex. But truly, it's a solid checklist. Before you invest in any deal, you should just scan through it. I think it's so worth it. And then, and after that, right, I'd love to talk. Like, if you just want kind of a one-on-one conversation around what this looks like, and maybe you might not be ready right now. Full disclosure, we don't have an active deal. We're looking really hard. I spoke to 3 brokers today. We might get something soon. But if you're just like, hey, I want to understand, I really want to understand this kind of flew, this kind of went way above my head, but break it down a little bit more. Even maybe you might say, send me a prior deal and let me just look through it. Let me vet it. Let me understand how it works. Send me the legal jargon, like the PPM, the operating agreement. If that's type of conversation that you want to have, I'd love to set up something with you. And me or someone on my team. And if you want to speak to me, I'll make time. But the goal is like, we just want to give you the information that you need to make a clear, confident, and informed decision, but at your own time. And I think that's super important. And so I want to bring it home. And I'm looking at the time and I'm kind of proud of myself. None of what we talked about tonight is about escaping medicine. And it's not about, trading in your white coat or leaving the patients who need us, right? But it's about honoring how much of yourself you give to the work that you're
You're
doing.
funny.
And I think that's the most important thing. And you didn't dedicate or endure like a decade of training. I can't believe I've been practicing for 11 years, but
Well,
all
it's
of that, you
almost big
didn't
enough.
sacrifice all of that, right? You didn't sacrifice all of that.
Mhm.
You didn't come this far to like mess all of that up, right? You wanted to build. I don't have to mute. Let me see if I can. Okay, perfect, great. And so you didn't come this far. Let me take that off. To not be able to build something that's really amazing, right? You didn't push through all of those sacrifices to kind of just end up being okay. Or like if you quit today, then that's the end of it, right? You came this far because you like want to build something. And so my heart for us is that we do it together. And so that's really what is exciting me about having these conversations with us women physicians. So I'm going to stop there. And I just wanted to say thank you. If anybody has any questions, I think we still have a little bit of time. If anybody has any questions about like how this happened, I'm going to stop sharing so that you can see. But real quickly, I'll just put the slide. Really, the biggest thing is just like if you want to connect with me, please feel free to. And that's my email address. And I'll put my number in the chat. But if you have any questions or if you want to ask anything, I'm going to stop sharing and then we could take it from there. But I want to say thank you for your time. I hope that was beneficial.
Thank you so much for that. I also have your contact information. If you're okay with that, I can also just share it in the group as well.
Perfect.
I when I first met you, I was very new to all of this. I'd heard some of the things, but essentially, I kept hearing like, well, you as the limited partner or whatever, me being the investor in your project, I had to also do my due diligence. And I was like, well, I don't know what that looks like. And so when I invested, I was like, well, I'm investing in you because like I trust you and I have no idea what that means for me to do my due diligence. So if somebody's presented with an opportunity to do this, what are like, let's say the top 3 or 4 things you would do as a limited partner, as if somebody's asking, who's being asked to invest, what would you do? What are the 3 things you would recommend somebody do?
Okay. So first thing I would say is I would vet the operator. Now, I say this and I've said this a few times, but like the conversation is what deals, and somebody asked it, what's the, like, how many deals have you closed? Are any of them struggling? One of the best things I can do is have a conversation with prior investors. So investors, like I expect people to reach out to you and say, tell us about them. What are they, like who are they? Transparency is a huge deal. So how often are you being communicated to? Can I see the financials? How's the property doing? Can I go visit, right? Like you might be, I'm going to use Georgia as an example. You might be in the area and the question is, hey, can I tour one of the properties, right? So those are the big questions, right? And you also have to know numbers. So at the end of the day, ask, like, what's my money doing? How much is my money making? The prior deals, somebody asked, what's the percent of return on average for the past few years? That's a great question. So I'll answer that in my question, but that's a question that you should ask. So we have done about 15%. That's our total return on our deals. Our next deal will probably do a little bit better. We're looking at 18.2% on the next one that we're about to sell. But I want to be honest with average. Oh, I also want to say this, right? If the numbers are too good to be true, right? If you're seeing returns at say 20, 22%, 24%, I would just ask you to pause and really ask questions like, where are you getting those numbers from? How is rent growing every year? If somebody tells you rent is going to grow by 10%, ask them to show you the last 5 years. Like and if rent grew by 2%, why do you think that it's going to grow by 10% this year? And that's how they get these numbers. A lot of these numbers are assumptions on how you think it's going to future projections. So if it's too good to be true, it's probably too good to be true. So just ask those questions. And I answered Dr. Vivian's question in the chat so everybody could see that. And I just answered Nancy's question as well. So if there are any other questions, if there are any other questions, please toss in my way. Like if this can be helpful moving forward. I'll say this real quickly because I get excited, right? My goal today is, again, I said it before, and it's just to plant the seed, but I want you to go do research, right? You might not necessarily want to invest with me. That's fine. But I think that as you think about diversifying and diversification, right, you should have real estate in it somehow, right? And so it might not look like you might fall in love with, Airbnbs, or you might fall in love with self-storage, or you might even have a practice that you decide to buy the land or buy the real estate, right? So just think about how you can add real estate into your portfolio. I think that's probably one of the things I want to say, and I think it's important. Dr. Vivian, you can go ahead.
Hi, Nkem. Nice to meet you. Thank you so much. This was a great presentation, very, very helpful. I had just a few questions, not in relation to, not about Pheenyx, and I'll
Okay.
message you. I'll set up a discovery call for that. But in terms of the self-directed IRA, so I do have one,
Okay.
and it was almost from like an old account, like an
Yeah.
old hospital I worked at, and
Yeah.
then I just funneled it in there. How often do you like, so I've used all the money, I've invested everything, right? And now I have some compounding interest from dividends that's coming through, which I can invest, but it's not a lot, right?
Yeah.
So I'm in my late 40s, 50s. And the thing that concerns me about syndications, I sometimes feel like it's a
Yeah.
long-term game. And where I am in life right now, I'm like, is that something I want to go in? Because I want something that's going to bring me returns in like 3 to 4 years, because
Yeah.
I still find that stocks are still okay for me. And then maybe doing like a single family home is at least an asset that I own, and I can decide when I want to sell, leave it for my kids, put it in a trust. But with syndications and stuff like that, I'm always worried, like, how quickly am I going to get this, 15 to 18% back? Um, and so that's one question I have for
Okay.
you.
I like this, right? And this is a really good question. The truth is that it's might not be for everyone, right? And like you said, right, you might be at the stage where you don't want to wait. So our deals truly are 3 to 5 years, right? Our goal is to sell at year 5. We structure our what we borrow from our lender at 5 years, right? We are like, this is the plan. So we don't plan to go longer than that. If the market is terrible, we will refinance, right? And we'll spend an
Mhm.
extra year or two and do that, right? So I understand that that is the case, right? So it's not necessarily, I'm not going to lie and say a blanket statement, this is for everyone. It's not for everyone, right? It truly is, if you have that capital and it's sitting and it's not really doing anything, and you have the time, right? Then it's for you. Now, the idea of like
The time. No, I just give you the money. Then you make me
No,
time.
no, no. I meant
I
time,
don't
like
have to.
physical
Oh,
time,
physical.
not
Okay,
work
yeah.
time.
Yeah.
But I'll also say this, right? This is something that can be passed on, right? So
Mhm.
a lot of families will invest like as a family. So then they put multiple names on the investment, right? So it's not
Okay.
just you, like it could be you, spouse, and kid.
So
So
not just as not as beneficiary, but actually
as
as
yes,
investors,
so your
right?
name, yes, so you don't have to, you don't just have to invest. So when you invest in this, right, you can invest as yourself, you can invest with your spouse, you can invest as with an LLC, you can invest with a
As a
trust,
trust. Uh-huh.
you can invest multiple ways. And then the thing about the self-directed IRA, and I want to just be clear if people don't know this, right, and Dr. Vivian said it correctly, it has to be an old 401k. So we might get to the point where we can use our active 401k to invest. We're not there yet. So you have to use you have to have like an old employer that you left the job and the money is just sitting there. And I'll say the thing about stocks. I also remember that part. So if you have that, right, and you haven't rolled it over into another active 401k, right, you can then take that old 401k and convert it into a self-directed IRA and use that to invest. You can invest in a ton of alternative assets through that. And a lot of us don't know that. Now, the idea with stocks, and this is true, right? The problem with stocks is that, and again, it goes back to time, right? If you have time on your side, right, then stocks are going to they'll come in cycles, right? And at the end, they'll do well, right? But the thing about, again, with real estate investing and syndication is that over it's slower in growth. I'm not going to lie to you, right? It's
Mhm.
slower in growth, but it's just a little bit more stable. And
Mhm.
you know that again, people will always need a place to live. Land and value will always appreciate over time. So over time, they all do really well. Now, I'll say this, right? If you were in a bad deal a few years ago, right, when interest rates were really low, operators were buying variable debt. That meant that they were buying debt at like 1.5%, 2%,
Mhm.
but it was variable. So it was day to day, that number could change, but nobody
Mhm.
saw that. Nobody ever thought that number would get to 8%, right? Or 10%. And so these people bought these deals thinking that these deals worked at 3% interest rate. They didn't work at 10%. So a lot of people lost money. I'm going to be honest with you. And so we only buy fixed debt. Fixed debt is a lot more expensive, but if the deal works with that, if the deal does not work with that debt, we're not doing it, right? Because again, we don't, it doesn't matter what happens to the market. I pay attention to it because my investors ask me, but it doesn't affect my deals because all our deals are fixed debt. No matter what, it's going to be 5.5%. It's higher, but it's still worth it. So I would say kind of when you think about it again, right, from a little bit more of a long-term horizon, these perform better. But if you're thinking like this is not for you, if you're saying I want this money next year, this is not for you. If you're like, and some deals, right? I had a deal I was in as a limited partner where we sold the deal in a year and a half, but that was like an extenuating, that was just not a normal situation. And I did really well in that deal, but that's not normal, truly, because the whole business plan, and I'll share this real quick. I'm cognizant of the time. The business plan is that we go in, right? We buy maybe a property that is like 2000, 1990, and we do renovation. So we take it from classic units and we bring it up to 2026 standard. So we'll take maybe rents were like 15, 1600. By the time we do renovations, we'll take it like the new tenants will pay maybe 1900. So think about that, like economies of scale, right? That 300 delta over 150 units, you're now
Mhm.
talking millions of dollars. So you need a few years to execute that business plan because we're not like we're not kicking tenants out to do it. So is as tenants is as leases dry out that we start doing renovations. So that really looks like 4 units a month. So
Mhm.
in a year we might do 50, right? And so it's going to take about a year and a half to 2 years to execute that business plan. That is why we need that 3 to 5 years to be able
Mhm.
to force appreciate the value of the property so that we can sell. But that's what that looks like. So I hope in a roundabout way that answered your question, but I kind of touched on a few points as to all the things you talked about.
Yes, it did. Thank you so much.
You're welcome.
And is Phoenix looking to, is it
Pheenyx.
Phoenix?
Yes, yes.
Phoenix. That's a beautiful name.
Thank
Is
you.
Phoenix looking to Do you guys have an arm where you do any land flipping? Because I
No.
think that, no. Okay. And
So
you
right
that
now,
so quickly, is that because you are
no.
anti-land flipping or?
No, no, and the reason why is because I said it quickly because I want to be clear on what we do, right?
Mhm,
I became an expert in multifamily apartment investing, and so that's like my bread and butter.
mhm.
We will eventually get into development,
Okay.
but that's probably when we get to like 500 or more in assets under management, then
Mhm,
we'll start thinking about development on a larger scale. But
mhm,
for right now, right, the goal truly is value add, which is just like renovation, multifamily apartments,
mhm.
build it that way.
Okay. Thank you.
You're welcome. Does anyone else have any other questions? This is really good. Thank you for the questions and for the engagement.
Um, you're amazing, as usual. So, I guess, do you have, I think you're mostly on LinkedIn, is that right? We want to find out more about you. And then I will share your information with the group. Is that
I'm gonna
good?
put my Calendly. I'm gonna put a few things on in the chat, and
Okay.
then and then I'm pretty sure this is right. And then I'm gonna also put my cell phone number. If you just honestly, it's truly like if you're just curious and you're like, I want to ask questions, I'd love to jump on the call and just like sit down and think through it with you. So I will put let's see if that, yep, this is my calendar. So you'll see that, and then I'm gonna put my cell phone number as well. And then feel free to take it, Rita, and then just send it to people.
Okay.
Yeah.
I have one other quick question. I know if people have to jump off, that's
Go ahead.
fine. But um, I obviously invested as an individual. Is this because we're all business owners in this group? Is this something that people invest in through their businesses as well? Does that have any other additional tax advantages? And
Yeah.
maybe it's probably a longer answer than what you have time for, but
No, that's a good question. So some people just prefer to like split things, right? And for like asset protection, and just like protecting yourself, sometimes you might just want to do this separate from yourself. So that means like maybe you create an LLC that you just use for investing in real estate. People don't usually, like, let's say your business, right? People don't usually invest with their business specifically.
I see. I see.
They usually create just like a simple LLC, and then use that to invest in all real estate, right? That's kind of
I
sometimes what
see.
people do. And then I have a bunch of investors that have used their trust because they just want to keep it inside of that. So those are truly the multiple options that people use.
Awesome. Awesome. All
Question.
right.
I'm
Uh,
so,
yeah, go ahead.
Oh, there's one more question in the chat.
so sorry. I had one last question because that made me think of something. What happens with lawsuits? So let's say, a renter is suing, is suing you. Does that mean all the investors are
No.
named in that lawsuit?
No, no. So it's just, and we use Kelly Clark. That's our legal team. And if you want to look them up, you can. Or if you want like kind of a conversation, you can. But they would be suing the business. Okay, so this is a good question. So every apartment investment that we buy is a business, right? So like a new LLC is created, a new bank account is created, a new everything is created. So it would be just that. And so they're not coming after individual people inside of it.
Got it. Thank you.
You're welcome. I hear silence, which means we're probably done. I really just want to say thank you. Thank you for giving me the opportunity to come and talk. And again, if you have any questions, please feel free to reach out. Okay. Goodbye, everyone. Have a wonderful evening.